Hey traders, Richard K here from Price Action and Income, and welcome back to another exciting video aimed at improving your own analysis techniques. I hope you all had a chance to view last week's video that I did on Babson's action and reaction lines and how his technique can be used to select important pivots to correctly draw your own pitchforks. Now, those of you who have been watching my videos for a while will know that I use market geometry as my primary means of analysis. But in today's video, I want to take a little step back and discuss what market geometry is and give you an example of a recent trade that I took using the drawing tools that I so often use. Okay, so what is market geometry? Well, simply put, market geometry is used to discover or expose the underlying symmetry that is prevalent in all tradable markets. Drawing tools like pitchforks and channels are some of the tools used in market geometry. And last week I showed you Babson's action-reaction lines. But today I want to add a few extra drawing tools into the mix to show you a great example of symmetry using the Australian US dollar currency pair as a picture-perfect example. Alright guys, the Australian dollar US dollar, as I pulled it up here on a chart, is on a 4-hour time frame. I just wanted to use the 4-hour to give you a perfect view of a correction that I've been tracking around here. When was this? It was about the 15th of Jan. I came up with a trading idea to short the AUD US dollar currency pair. And this analysis was then roundabout done after the fact. But there was enough symmetry prevalent in this market that made me think or qualify that I might be on the right path to actually short this trade, which actually turned out to be a massive trade to the downside, which has since broken this low back in October 2019. And this is just a great way of showing you that although you might not have been present to actually take this trade right at this high over here, that it would be perfectly fine to have just waited for a reaction, which could have been your first condition to make you think that there could be a larger trend moving downwards and that this possible corrective pattern ended here on basically the 31st of December. Now, obviously, 31st December was the last day of last year, and most people will probably be making New Year's plans, so I doubt that quite a lot of people would have actually taken a trade over here or have even seen all of this analysis at that time. But just to quickly explain you and show you why symmetry is important in markets and how you can use some methods to expose that symmetry, obviously using market geometry. Now, all I did basically at roundabout when this low came in here around January, I wanted to see if this was an important high. And again, I'd done this after the fact. Like I said, there was enough different instances that happened around this high that made me think that important high was in place, i.e. symmetry. So as we all know, or should know, is that when you are dealing with a correction, that it typically happens in 3 waves, subdivided by 3 or different other waves in between, which could be quite complex, but then that's why I use market geometry to basically guide me into an area where I think a correction might end. So I simply labeled this as an A, B, C, and corrections will quite typically trace out in either a pitchfork or within a channel. So prior to this low in October, price was coming down, straight down. And if you look at a daily or weekly chart, the trend was still down. So I didn't just assume that whatever was happening here, although this was after the fact, we only ended around here, was simply a large correction. And how I drew my channel was to use this low, where I used this arrow, extended it to this, which is my second pivot that I used, and then extended it to this higher high over here. So a higher high, higher low, and it gave us, with pretty decent accuracy, the C wave here. But this in most instances won't just be a reason for me to short the market. There were also other instances or lines that could have been used to actually discern if this was an important high. And what I want to do here is, if you guys view my Babson action-reaction lines, if we just drew a channel from there to this high, extend it back to this low, then you'll see that we had an action and reaction line. Price went up this line. Yes, it broke down below it a few times, but it's only after it read the top of the channel and around about where after it reaches channel, when it broke below this line, it was game over and the Australian dollar weakened versus the US dollar. So that was just a technique of using Babson's action-reaction line. That was a confluence of multiple market geometry lines at that high, but that was just a minor piece of the puzzle. Quite often you'll see when you are dealing with corrections that there are also symmetry prevalent in the ranges between different legs. And this is another technique where you could just use your Fibonacci extensions in this case. Again, guys, a picture perfect example, but nonetheless, if you do see picture perfect examples like this, it's quite often necessarily that you have to take them without any doubt. So if we use a Fib extension from the first swing higher, and extend that to below this higher low over here, you'll see that our C wave in this case just overthrown 100% extension of this first wave higher, which basically now tells me we have a cross of three lines. We have an upper channel line, we have this Babson reaction line, warning line, and we have 100% extension of this first wave as well. So now we're slowly building a case as to if this high was important at all, and thus far we have three different uses of market geometry that is already building a case that we could have had an important high. And then something that I quite often use, it doesn't really work that well all the time, but it is something that I did use in this case, especially when you're dealing with a beautiful ABC that's got symmetry involved. That is that if you use, let me just show you that again. If we use what they call on TradingView trend-based fib extensions, and I'll explain that a little bit later after this example, and you use the time that this first wave up took, and I take it from this low where it started from to that high over there, and you extend that to this higher low over here, then you'll see that this B or C wave took exactly the same time as this low to this high would have taken. You'll see we got 100% extension in time over here. That gave us four different, pretty strong indications of where everything came together at this high, that something important could have happened afterwards, and we had a massive reaction lower. I only started looking at this when I came back from holiday, and it wasn't up until about here in January, around the 10th, that I start thinking if price would retrace back to the center channel line, that we could probably get a end of a correction, in this case a lower low and then a lower high followed by a trade to the downside. So that, guys, just in short, a quick video of showing you that there definitely is symmetry or underlying symmetry prevalent in all markets. Not all corrections, you might as call this a, I don't know, it's too zigzaggy to really say if this was an ABC, but as you all should know that corrections happen in ABCs, and you don't really have to be correct all the time trying to label your corrections, but if you use market geometry as your guide, like in this instance, there were four different instances or techniques that showed you that this beautiful high over here was a strong one, and especially after there was a strong reaction lower, that you probably had an important high, and it was now just a simple matter of waiting for another correction to the upside and then jump in. We actually jumped in after price reacted from this high over here, or the lower high, and after this bar came down, we entered and we rode it all the way back eventually till it broke this October 2019 low. And that, guys, is just how you can use different techniques. In my case, I use a little bit of Fibonacci extensions onto this trade setup. I used Fib time. Fib time is basically just looking for similarities in time. You could basically have just done the same thing over here. Also, sorry, let me just use my measurement tool. Used a date range from this low. Sorry, let me just get rid of the magnet mode to that high there. And if you projected that over this low over here, it gave you this high over here. And that's basically what Fib time extensions do. All right, guys, later on, and probably in some other video, some later on, I'll look at a little bit more complex patterns. There's also another technique that I like using when dealing with triangles, something I don't quite often show, but just another great technique nonetheless to help you enter at the most opportune times when dealing with triangles. Today we just looked at the simple ABC correction. Whether that was a double zigzag or whatever, doesn't matter. Just simply using different market geometry tools helped us to decide, or helped me decide, that we had important high. Although I didn't trade that high, there was enough confirmation where price came downwards that this trend could now continue lower, and we entered a little bit later, and boom, price just dropped like a stone, and we made some decent money on this trade. And that, guys, short what today's video was about. I hope you liked it. Please leave a like button or hit the subscribe button if you haven't done so before, and I'll be back next week with another insightful video. Until then, have a great week. Cheers, guys. Bye bye.